Hey everybody, Rob Maurer here. Happy New Year. Today we are of course going to be talking about Tesla's Q4 delivery and production report just released this morning. Pardon my setup here. This is going to be our setup for the next week or so. I am still in the process of moving, so thanks for bearing with me through that. A lot going on right now. All right, so getting into the delivery report, obviously a little bit shorter of the analyst consensus, which the company compiled analyst consensus for deliveries came out a little bit after recording on Thursday. I think that may have come Friday morning. That was 417,000 for deliveries. I was at 434,000. Obviously, now the 405,000 that Tesla has reported, falling a little bit short of that, about 6.5% short of mine, a couple percentage short of analyst consensus. On production side, that was a little bit closer, 439,000 to my estimate of 450,000. So just a couple percent off on production, which obviously I follow more closely. So I gave my caveat on deliveries. Hopefully that was well received, but obviously still a little bit falling short. With 439,000 vehicles produced this quarter. So year over year, that is 47% growth in production, 40% growth in deliveries, both to record 1.31 million for deliveries and 1.37 million for production for the year. And of course, these are record quarterly numbers as well. Still, not what everyone was hoping to see, not what the potential was when we started the quarter, and I do think fell short of Tesla's expectations when they had given guidance on the Q3 earnings call. So we'll talk a little bit more about that in a second, but just to look at the numbers here. So the breakdown, a little bit less Model S and X than what we would have expected based on the sequential growth that we have been seeing. Model S coming in at 20,600 production. I had 22,500, and deliveries even falling a little bit short. So maybe some transit issues there. Tesla does talk about how they continue to transition to a more even regional mix of vehicle builds. So sort of the unwinding the wave, which of course they talked about in Q3. So maybe we're seeing some of that. I know this is sort of the first quarter we're starting international deliveries for S and X, but even the production number there a little bit less than what I would have hoped for. And then Model 3 and Y falling just short of 420,000 on Model 3 and Y. Deliveries quite a bit less than production, 388,000. All right, so let's switch into Excel here, and we can just see how this compares to my forecasts. I'll take a look at a couple other things as well. So hop over there, and I've left my forecast from last week in. You can see I was 10,000 vehicles heavy on production, so let's just kind of take a look and see how this might shake out from what I had forecast, so we can get a better idea of where things are at, where things are going forward. So the first thing, easy thing, Model S and X, as I said, I was at 22,500, so we're at 20,613 there. That takes a couple thousand off. And then we need to reduce elsewhere to eventually get to our number. I'm guessing Shanghai is going to come in a little bit shorter, so we'll take a couple thousand vehicles out of there. I was kind of in the 60 to 65,000 range, so let's cut that down by a couple thousand. I'm guessing even though we did see a ramp throughout the quarter in Berlin and Texas, I'm guessing it wasn't quite as linear as I projected in terms of the rate of progression. So as you can see, I'm going for Texas, 8,000 in October, which we can be relatively confident in based on that 20,000 life-to-date production update that Tesla gave us that day at the end of October. I'm guessing that this was just a little bit less smooth as they ramped up to then 3,000 per week towards the end of the quarter. So I'm going to take a couple thousand out of both of these, and then I think the rest would be coming from Fremont. So that gets us to about 2,500 over what Tesla actually produced. So let's just take that for simplicity's sake here out of Model Y. Not that that's too important where that comes from for these purposes. Let's see what the number was here, 2,521. So this is the production picture we're kind of looking at. I'm guessing we're not going to end up seeing much sequential growth from Fremont. And even if you consider that we have the extra production day there, probably even less on a daily rate perspective. For Shanghai, obviously still tremendous progress quarter over quarter, but falling off there in December, which is, of course, a cause for a lot of concerns, especially as we talk here a little bit more about the in-transit number. And then Berlin and Texas, probably more in the 55,000 range or so. Obviously, these are just sort of our best guesses based on the information that we have today. But as we said, that puts production year over year at 1.37 million. That's up 47% year over year. And quarter over quarter, even though this isn't what many of us would have hoped for at the start of the quarter, still a strong quarterly progress, 20% increase quarter over quarter from Q3. And Q4 itself is up 44% over last year. So next year, if we want to see 50% growth next year, just kind of off this basis that we now have established for 2022, we would need to be looking at 2 million and about 50,000 vehicles produced next year. So let's come back to deliveries now. Let me unfreeze these windows. I'll take a look at deliveries, which is obviously going to be the cause for more concern in the markets. Demand concerns are going to continue to rise because of this report. So we now have about 405,000 vehicles delivered here. That is still quite a bit of progress quarter over quarter, up 18% from Q3, up 31% from last year, and as we said, up 40% for the total year from 2021. Same thing here. If we're looking for 50% growth next year, that would need to be about 1.9 million 70,000. So terrible way to say that, but 1,970,000 would be what we'd be looking for next year. So on the inventory front, I know my column isn't visible here, but the change in inventory, this is 34,000 vehicles being added to inventory. Third quarter in a row, we've seen that inventory grow. We should now be at roughly 71,000 vehicles or so in inventory on top of the 37,000 that we had roughly last quarter based on Tesla's earnings report. So that gives Tesla about 13 days of inventory, up from 8 last quarter, which I think was up from about 4 when we were really, really low on inventory at the beginning of the year. So although it does feel like a lot of vehicles here, 71,000, from a days of production standpoint or days of inventory standpoint, 13 days, still way, way lower than average in the automotive industry. Obviously, we should expect that a little bit from Tesla based on their different, more vertically integrated business model, but still relatively low inventory in the automotive sector. So those are some of the good things. The record quarter, these sequential growth numbers are really strong. On the more negative side, obviously, as I said, falling short a little bit of expectations, and particularly what we hoped could have been accomplished at the beginning of this quarter. And I think, as I said before, short of what Tesla expected on the Q3 call. And that's really what the essence of the report is. It's not so much anyone being disappointed with 405,000 vehicles. It's a record quarter. That's great. That's all fantastic. But the concern is that where's the growth come from here, right? Like we're always talking about with these reports, it's not so much about just this quarter alone. It's about where things go from here. So that's the question as we head into Q1. And because I do think these fell a little bit short of what Tesla had expected and sort of guided for in the Q3 call, that amplifies those concerns. This inventory number being so significant also amplifies those concerns. I expected a smaller growth number, and one of the reasons for that, a smaller growth number in the inventory, one of the reasons for that was because Shanghai was shut down for the last 6-7 days of the quarter. That's their most productive factory. So that's a whole week there that you have to deliver vehicles where no vehicles are being produced and added to inventory. So that would call this number into even more concern in terms of what the market and the street is kind of going to take away from this, things that they're going to keep an eye on from this report. So in terms of the guidance, I'd seen some stuff, and there was a comment from Elon on Twitter that definitely would have made me reduce my estimates if I'd had those comments before doing my episode. Unfortunately, no time to provide an update on that with everything that's been going on here. But let me flip back to the browser here and we can take a look at that. So what I'm talking about here is Tesla's guidance, and why I'm saying that I think this fell short of what they expected. Of course, Zach on the Q3 callback in late October said that as we look ahead, our plans show that we're on track for the 50% annual growth in production this year, although we're tracking supply chain risks which are beyond our control. And then they say on the delivery side, excuse me, we do expect to be just under 50% growth due to an increase in the cars in transit at the end of the year. So just under 50%, we actually came in at 40%. I've talked before, even when we got that. To me, that would mean 45%. It's a little bit ambiguous, but just under 50%, 40% would kind of be a stretch on that. I think Zach probably at the time meant a higher number. And then, of course, production didn't end up hitting that 50% annual growth number, only at 47%. Now, Larry Goldberg on Twitter, made some good points here in this Twitter thread, basically saying, hey, since 2020, Tesla has said on a multi-year basis, our average growth is going to be 50%. Some years may fall short. This year obviously ended up being one of those years that falls short. This is a fantastic reminder that people need to keep in mind for sure. We talk about this a lot, and hopefully Tesla will talk about that on the Q4 call because, based on Elon's comments, I'm not sure how confident they are in 50% growth for 2023. So it's a good reminder, but at the same time, I think it's being misapplied to the comments that were made on the Q4 call or the Q3 call, which I think were specific to this year. So Elon did reply to this and said, this is a sensible thread. And again, the essence of the message is quite valid and needs to be kept in mind. But at the same time, this goes kind of to the point of saying that people misunderstood what Zach was saying on the Q3 call and saying that, that 50% number that he's talking about there is applied to the basis from 2020 when they first gave this long-term guidance. And personally, I do not think that is the case. If that's the case, it's a poor way of conveying information to analysts because they're not going to interpret it that way without added clarification on exactly what that means. So whether they meant it or not, I think should have been communicated more clearly if they did. I actually think that that's not what they meant though. So if we look at these comments, 50% growth, we expect to be just under 50% growth on deliveries. If we go back to Excel, we can see what that number would have meant for Tesla. And, it's really not anything close to that. So flip back here, let's look at deliveries. 50% growth from that 2020 basis, which was about 500,000 vehicles, that would have meant 1,124,000 vehicles delivered this year. So if Zach was talking about this multi-year compound guidance saying we're just going to be just under 50% for that, we would not have come in at 1.3 million vehicles delivered. So it really doesn't make sense in that regard. He has to be talking about 2021 because this would only have meant 215,000 vehicles or so being delivered in Q4 for them to fall short of that. And obviously that was not what Tesla was guiding for at that time. So he's definitely in these comments, which are paired comments, referring to 50% growth in 2021, which means that Tesla quite obviously fell short of what they expected back in October. That's going to feed into the concerns around what happens in Q1, what happens in the rest of 2023, and how confident people can be in Tesla's guidance if they did not hit it in this quarter. Analysts like to have guidance that they can just plug into their models and apply a small percentage increase off of, assuming some sort of upside to those estimates from management. They really, really, really don't like it when there's a situation where guidance is given and then it's something that falls short of those expectations. So those are my thoughts on that. Personally, I'm not so bothered by that as much as I think the market or analysts might be. I, as hold a very long-term perspective on Tesla. So, as we've been talking about for the last month, 6 weeks, couple of months here, I think that the signs that the quarter was going to fall a little bit short have been pretty clear for a while. And hopefully some of those reasons are more temporary in nature in terms of COVID impacts in China. Obviously Tesla is, I know it seems like kind of an excuse, but Tesla is doing a little bit of unwinding of the wave. On the opposite side of that argument though, if they're really unwinding the wave, why did they do all this discounting at the end of the quarter in the United States? I think that's largely to protect this number and make sure that it's something reasonable. And I think that's a reasonable tactic to take when you have on the other side of a arbitrary date, January 1st, when you have a $7,500 tax credit then coming. It kind of makes sense to try to bridge that gap a little bit just to keep logistics smooth and things like that. And Tesla is obviously, the stock is quite down, so helping support that a little bit by making sure that this delivery number wasn't even lower, I think makes sense. So anyway, in terms of long-term perspective, like I said, although I don't agree with the conclusion that Zach was talking about the multi-year guidance there from that thread from Larry, it is a very important reminder that long-term, this is, there's going to be bumps and valleys along the way, but eventually, hopefully Tesla is still on track from that. As I said, 50% growth from 2020 would have been 1.1 million, came in at 1.3 million here. Same thing with production, 1.15 or 1.37. So even if next year falls short, Tesla would still be on track with that initial guidance of 50% from that. Sorry, my chair's squeaking a little bit. 50% from that initial long-term guidance. All right. I think that is it for today then. Let's wrap it up there. We'll see what the market, I don't think the market reaction to this is going to be too strong. I think this inventory number, this lower deliveries than expected, both of these things are going to just increase the concerns that have been in, day by day sort of creeping into the stock. I think been talking about that for a long time. Like, I don't think that this has just been Elon driving the stock action. I think analysts have been having the concerns about this quarter and go forward for quite some time. So I think that's definitely playing a role. So we'll see. I don't expect a super positive reaction, but at the same time, maybe some of this has been priced in because of what we have been talking about with those concerns. So I don't think it really quells those. So I don't expect any sort of relief rally off of this, but hopefully, I have no idea what happens tomorrow, but hopefully not anything too bad. So we'll see on that, but that's where we'll end it for today. So as always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and we'll see you tomorrow for the Tuesday, January 3rd episode, I think, of Tesla Daily. Thank you.